What's good, my people? So let us see the market delivery for today, for yesterday, and how we could anticipate the direction of the market where it's going. So we'll start by the 1 day, the daily time frame, and as you can see here, I'll be doing a long recap. So as you can see here, the market went up, was on a buy trend around December. This is the daily time frame, and this is the low, and this is the high where we anticipate the market to reach. This is the high where we anticipate the market to reach here, since it's on an uptrend. And as you can see, the market retraced down, failing to take out this low, and this one took out this low here. This is an order block, a daily candle order block. Then after taking out that low, the market started to gain a momentum, going upwards, took out this high, then gapped down again, didn't take out this low, but resumed to go up. And if we use a Fibonacci from this low to this high, you'll notice the market reached the 62% level where we usually love to take the trades from here. We anticipate the market to reach that high. So let us drop down to the around 1 hour time frame. So yesterday on a 1 hour time frame, as you noticed that it was on a Monday, and the market gapped down when it opened on Sunday, and when the 9:30 candle, when the market opened, it went down, failed to take out this low, and went up, filling this whole fair value gap, which I was anticipating this move, but I didn't have the opportunity to enter. But we will be looking at that 9:30 open move and see how we could be able to enter and what we could have noticed so that we can be able to enter. Let us drop down to the 15-minute time frame and see the opportunities that lie there. As you can see, this is the 9:30 candle open, market open. On Nasdaq, we usually trade when the market opens. That's when we have volume. As you can see here, we don't have so much volume. It took a lot of time for the market just to reach here from down here. There is no much volume before 9:30. That's why I usually prefer to go with the 9:30. But as you can see, at 9:30 there was a benchmark volume. You see the market reached up fast, went down fast too. So there's a lot of movement after 9:30 when the market opens. New York session, guys. New York session. So let us drop down to around 5 minutes and see where we could enter the trades. I usually trade with the 5 minutes, enter the trade with 5 minute time frame and 1 minute time frame. That's the time frames where I usually like to take my trades in. And as you can see, 9:30 candle opened here. This is a nice black candle here. It showed some signs of going down. 9:30 took out this low, and started going up. Immediately when it was going up, since we were still on the uptrend, there was a significant market structure shift here. This market structure shift was accompanied by a nice order block. Since you can notice this as an order block, since you see this, you can see the following candle did not close down its body. It closed up, but the wick went down. This was a nice order block. This was a nice pointer to show you that the market was going on an up direction, drawing to this fair value gap. I usually prefer to put my take profits on the places where the fair value gap starts, or here below the highs, below the fair value gap after the fair value gap that formed after this high was formed. I love to put my TPs here, since the market usually goes there first before trying to retrace, then going to take out these highs. That's where I usually love to put my take profit, and as you can see, the take profit was reached here by some pips. So let us drop down to the 1 minute time frame and let us see the real market delivery here on 1 minute time frame and how you could have been able to capitalize on it. And we'll be looking at the 9:30 first. That's where we will identify the trades. And as you can see, these on a 1 minute time frame, they usually have a lot of movements where you could find yourself getting confused, and I know a lot of guys get confused here, and they could have taken a sell trade since you can identify this as a market structure shift. But since on the bigger picture, you should always look on the higher time frame so that you can know the direction of the market. The higher time frame helps you know the direction of the market before getting inside a trade. You can trade with a 1 minute time frame, but the direction of the market, you could be looking at it on a higher time frame perspective. And as you can see here, this is the on a 5 minute time frame, this is the high that I pointed out where the market structure shift happened. The market structure shift happened here. Let us put that text. Market structure shift. The market structure shift happened here. So after the market structure shift happened, it went took out this low here, a temporary low that would form. This is the major low, but this is the place where the liquidity was, took out the low, and straight up went to take out that high. It's where I usually love to take my trades since it has the bulk of the position and it's on the discount side going to the premium side. So we'll start by identifying where you could have entered if you were on the market at this time. You will start by identifying the lows and the high that have been taken out, and as you can see here, the low that was taken out was here, but didn't went on and continue to take that these lows here. It immediately went to the opposite side and took out this high. Then when trying to identify the direction of the market, you will notice that this low wasn't reached again. So on the simple side, if you wanted to have a confirmation of if the market was going on the buy side direction and you were hesitant to get into the trade, you will be identifying you will be entering from here since this high was taken out again. This high was taken out, first high was taken out, then the second high was taken out again. You will see an order block here, then the market expansion to the high that I had pointed out here. So you will be getting on a long position here. When this high has been taken out here, your stop loss will be way down here since this was the low that was taken out prior to this change of direction. Then the high will be here. This being conservative, and you are very hesitant to take the trade. It's a nice 1.7 1 to 1.7 ratio risk to reward, but this for me, I usually don't like taking such trades since it has a very high risk margin, since the stop loss is very far away from my position where I'm entering. So I usually love to place it here. This for the first technique is for the conservative people who usually have fear getting into the market. but this is for more experienced guys. You will put your stop loss there, and you are immediately after this low was taken out, you will have been entering on that position there, aiming on that high. And as you can see, it's a nice whopping 1 to 6 trade, where you would have just risked around you'll have just risked around $18 to get $126. No. When trading with a losses of 1, you'll have risked $187 to get a whopping profit of 1,284 USD in profits. And with that, this was a nice market delivery. And with that, let us meet on the next video, where we'll be discussing a nice short position that I took here, took out here, and my stop loss, my take profits was here, and what I was anticipating in order to take such kind of trades. And with that, let us meet on the next video.